Hello total traders and welcome back to another market review brought to you by Orbex. It was all about Wall Street in yesterday's trading. Over $100 billion wiped off in bank stocks, and also indices started to capitulate as well. We've seen the Dow as it stands on a 6th day losing streak because of this negativity in the banking sector. Joe Biden was quick to come out to quash rumors that there will be another banking crisis like the one we saw in 2008. All depositors for SVB and Signature Bank will be repaid. However, it is looking like a lot of confidence is being missing now of not only the American economy but the banking sector itself. We've had ripple effects in Europe as well. HSBC, NatWest, they're all falling quite sharply as well. We're seeing now possibly a move higher on gold because it's broken the 1900 handle for the first time in a while, and now we're seeing that it is actually confirmed and pushing higher. So is this a case of a bit of a weak dollar in the near term, and are we going to see another push on these banking stocks? We'll have to see the next Fed decision because they are expected to actually mute or possibly only go 25 basis points on the next rate hike, where actually it was supposedly to be 25 to 50 basis points, but now the Fed are actually going to reevaluate that in next week's meeting. So with all that being said, lots to get through, lots to look at on the charts as well. We're going to start on the Dow because, as I said, from the morning session, we've had this 6th day losing streak, very bearish candles here. And, you know, if we look from before where we saw this V-shaped recovery happen on the Dow, we had this kind of resistance that we knew we were going to get because it was the last swing high on this indice. But since then, as you can see, very choppy in the sense that very indecisive until we got this news of the SVB starting to go into, well, collapse basically last Friday, but the rumours were before that as well. But it's interesting how quick something like this can happen, and obviously how the markets can react, because the NFP numbers were completely brushed away after reaching over 300,000 new jobs being added. So because of that, we've had a downturn on the Dow. But where are we going next for the Dow? Are we looking at some support? Are we looking at something to really start moving in our direction? Well, at the moment, as you can see, very bearish channel that we're stuck in with the assistance of the Ichimoku cloud. We've had some resistance at the lower border, and now we are slightly consolidating below 32,000, and this 32,000 is for the first time since the back end of November, sorry, the beginning of November, back end of October. So with that being said, are we going to have another big movement to the downside? If we pull this right back, as you can see here, we've had an upshift, major consolidation before we're having another downturn as well. This downturn obviously went below 29,000 as well, which was quite significant because it took a while for it to get back up to the dizzy heights of above 34,000. So we're just waiting to see what's in store for more information coming out of the American economy, because the former White House finance advisor did say that you can't keep plugging billions and billions of dollars into banks and expect that there to be some kind of happiness at the end of the road. We are seeing now the repercussions of really big interest rate hikes, and obviously interest rates being quite high as well. So this is the result. Many clients and customers put their deposits into these banks. These banks have obviously invested them into bonds, and the bonds have just not given back what they thought they would do. So this is the repercussions and the downturn in Wall Street at the moment. If we look on the S&P, most noticeably, what we saw last time, I'll just keep it on the 4-hour chart because it's a little bit more interesting. We saw this bullish channel being emerging from a while ago. But since we had a move out of it, since we didn't get a confirmation, and this was at the beginning of the month, we were expecting this bullish momentum to keep on pushing higher and possibly hitting these next peaks. Because of the news in Wall Street, obviously we've seen this collapse out of the channel. Now we're looking to the downside. So now we're looking at support on the last swing low, which was just below 3,800, currently trading at the mid 3,800. So we've got a few points to go before we start moving lower. However, it is a little bit more worrying for bulls in that sense, because we could start moving quite vastly in the next few trading days. I just want to bring a slight look on gold, because we looked on gold yesterday and we was, I did say that 1900 was going to be cracked and confirmed. We're now trading roughly about $10 above that. We did get up to 1914, 1915 in the early session, but it just goes to show how much of a big momentum gold can have. So keep an eye on the commodities as well that are going to be affecting not only the American economy, but also the banking economy as well. Goldman Sachs, JP Morgan Chase, Citigroup, just to name a few, all collapsed yesterday. So a lot of valuation knocked off of these big banks in Wall Street. So just keep an eye on that, and we'll bring you the latest in the news development and also the core inflation rate later on in today's trading. So stick with us, stay ahead, and trade responsibly, and I'll see you next time. Bye for now.